Morning, our webinar is about to start. Please stand by as more attendees join. Good morning. My name is Sebastian Perez Ferreiro. I'm managing editor for news at BNamericas. Today, we will be talking about the emerging hydrogen industry in Latin America. First, I will present some of the recent developments in the countries that are leading the race in the sector. Then Cristobal Riego, BNamericas energy analyst, will hold conversations with Santiago Acosta Maya, VP of Transformation at Transportadora de Gas Internacional, a Grupo Energía Bogotá company, Santiago Bautista, Business Development Manager for South Andina region at Siemens Energy, and Tom Hutton, partner at E4 Tech and ERM company. I would like to remind all attendees that you're in listen-only mode. You can ask questions using the box on the right-hand side of your screens. Let's start. Latin American countries are vying for position in future international green hydrogen market, which is expected to take off starting in 2025. The countries that are currently best positioned are Chile, Brazil, and Uruguay, followed by Colombia, according to several experts and industry participants. Nora Castañeda, Senior Energy's hydrogen business manager, says, at the level of small projects, Europe is going to go ahead and have local generation of hydrogen for specific consumption. But from then on, to obtain large volumes of hydrogen at reasonable prices, development in Europe will be quite in step with development in Latin America and other areas, such as the Middle East. Chile developed a green hydrogen roadmap and set goals such as having 5 gigawatts of electrolyzer capacity under development by 2030 and achieving a price of $1.50 per kilogram by 2030. Incentives include $50 million in financing round for private pilot projects through development agency Corfo. The hope is that through a clear roadmap, regulatory certainty, and some economic incentives, the country's resources will attract the interest of international and local developers. In Brazil, where local demand for hydrogen is strong in the fertilizer, refining, and petrochemical industries, support is coming from large ports, Suape, Pecém, and Açu, which are looking to decarbonize operations. The country approved its national hydrogen roadmap in August, and there's strong industry interest. Gabriel Salinas, counsel of the private equity and project development practices at law firm Sherman & Sterling, said, countries need to focus on being clear with investors about the size and scope of the opportunity. You need to think about resources, geography, and government support. Chile has been at the forefront due to those three resources. You can also see Brazil making great strides. Mexico has great resources, but the government needs to be more supportive. Uruguay has pledged to have 20 gigawatts installed by 2040 through its H2U program. The country is working on long-term planning that includes regulation and incentive schemes. It's also conducting a $10 million research and development funding round and long-term bidding rounds to explore offshore wind and green hydrogen potential. And in Colombia, the government unveiled its long-term blueprint for clean energy, outlining plans for up to 3 gigawatts of electrolysis capacity by 2030 and wide-scale adoption of fuel cell vehicles. Grupo Energía Bogotá CEO Juan Ricardo Ortega said the company is seeking to play a major role in the country's plans to be a global hydrogen leader, but warned that local developers must overcome challenges related to financing and project costs if they are to successfully compete on a global scale. Cristobal Riego, BNamericas Energy correspondent, will now moderate a discussion panel with Santiago Acosta Maya, VP of Transformation at GEB's Transportadora de Gas Internacional, Santiago Bautista, Business Development Manager for South Andina Region at Siemens Energy, and Tom Hutton, partner at E4 Tech and ERM Company. Cristobal, over to you.
Thank you, Sebastian. Let me first ask our esteemed panelists to turn on their cameras as well as their microphones, please. Excellent. I can see you now. So first of all, let me welcome everyone to the call. Welcome Tom, Santiago, and Santiago. Let's start with our first question to get this discussion going. We at BNamericas, we track projects around the region, and we see a lot of green hydrogen pilot projects in early works in Latin America, and even one or two that are starting construction, especially in Chile. But large projects still seem far away. So first, to open the discussion, in your view, is the region running at a speed that will allow it to export green hydrogen to other regions by 2030, like it's outlined in some of the national strategies? And if not, what is needed, in your opinion, to pick up the pace, or what timetable do you see as more realistic? So let's start with you, Tom.
Hi, everybody, and thanks very much for the opportunity to join this call today. My sense is that the demand for hydrogen is definitely growing, and the means and the support for the import of hydrogen, particularly into Europe, is now accelerating. It's been a long road, and it's been also disrupted, I think, by events in Ukraine, which has really destabilized the energy picture in Europe, and has meant that a lot of countries, a lot of companies have had to scramble to try to deal with that contingency. But what we see now in Europe is a really kind of strong process emerging for to unlock demand for the import of hydrogen. And notable among those is H2 Global in Germany, which is now well advanced in terms of setting out the framework that would support that. So I think if we look internationally and we say, well, okay, what are the regions around the globe that would be the most likely to be exporters of hydrogen to Europe? There's a few regions that we immediately pick out. I mean, if we think about it kind of more in the abstract and say, okay, so we know the GCC countries, the Middle East, that's an attractive region. We know Australia, that's another attractive region. Latin America is clearly a third one. And I think it would be fair to say that Europe has been a little bit more focused on the GCC countries recently, probably because of the proximity of those countries, but also because perhaps some of their plans are slightly more advanced than those in Latin America. But I think, whilst I would agree with the observation that the development in Latin America has been rather slower than perhaps people hoped or anticipated, I think now we have in place clear measures that will help to support that export of hydrogen. And I think we will now see an acceleration of those projects. I don't feel like Latin America is a long way behind other regions, probably a bit behind GCC, probably a bit behind Australia. Although, talking from a European perspective, I don't think Australia really is under consideration. It's too far away, and there are other markets more attractive for Australia. So, looking at that positioning on the global landscape, I think Latin America, yes, maybe a little bit behind. But now we're getting those clear measures in place in Europe. I have every reason to believe that that will now accelerate, and that's borne out by some of the projects that we've been doing focused on Latin America, involving companies in Latin America, involving projects in Latin America that that give us every reason to believe that that will be realized.
Thank you, Tom. Santiago Bautista, what is your take on this issue of how fast we're moving?
Hi, everybody. I agree. I tend to agree with Tom in the sense that Ukraine war definitely was a game changer in the world. And I do agree that Latin America has all the natural resources for being a green hydrogen hub for the world. Because the major, I mean, you need a lot of green energy to do that, reliable and stable green energy. And the region has hydro and has certain natural resources in wind resources and solar resources that will allow to have that base load green energy to technically develop the products. I think the major challenges that we have is that the actual green hydrogen market does not exist, even though we are talking about products that actually have been existing in the industrial world for more than 100 years and has been used by several industries. We are proposing two changes. One is the way these products are produced or are manufactured, and second, in some cases, how these products are going to be used. For example, there are some trends to use, for example, methanol or ammonia for sea transport, for example. There is no doubt that these products can be burned and can be used in these industries. Though since they had never been used in those particular industries, we need to see what are the risks of using that and how we use it and create the markets. So I think that the major challenge that we foreseen for the next 5-6 years is to have reliable off-takers, to have the deals of having a reliable off-takers, that the off-takers goes together with the developers, and therefore you have a suitable financeable project to start going. And once the market start growing little by little, we'll have enough indicators and enough history over the commodity prices to finance these projects in a standard way. But currently, there is no commodity price history to be able to structure the projects. Therefore, there has to be tools and a special mechanism in these first projects to overcome the barrier. But I'm pretty confident that once those initial barriers are overcome, let's say, there will be a lot of projects in these areas, and it will be a booming market in Latin America. For sure, will be a hub for the region, for the world.
Excellent, thank you. And Santiago Acosta, do you have anything you'd like to add?
Yes, thank you. Elaborating from Tom's and Santiago's views, what I have to say is that Latin America is definitely a very good place to develop green hydrogen projects because it combines both major resources, which are wind and solar energy, but also water. In that sense, water is needed for energy production, and there will be social issues regarding the use of water because you are decoupling the molecule. So you are, in people's minds, you are destroying the molecule. You are taking water from the planet to convert it to oxygen and hydrogen. So the water issue will be very, very important. So I can imagine the struggle in Australia with the use of water regarding climate change due to global warming. And the same will happen in a way in Chile, which is also having issues regarding water infrastructure for agriculture and even cities and reservoirs. So we have seen major news regarding water. So we have to take into account water in the equation. And in many Latin American countries, we are having excess of water due to climate change. So in terms of a global solution, Latin America would be a huge player. And so that would be a very important issue. And the other one is something that Santiago said, that you need reliable off-takers going from the beginning with the project. You cannot have a sustainable hydrogen project without the off-taker with you. I have seen For example, the pipeline of projects in Spain with a company called Enagas, they have like 30 projects in their backlog, something like 3.8 billion euros in investment. And all of these projects have a major off-taker from the beginning. And they are also considering building hydrogen exclusive pipes from 100 to 500 kilometers from the generation to the use of hydrogen. And one of the major uses will be exports. In Latin America, I think we have huge potential for export, sustainable in terms of water footprint, green hydrogen from Latin America, and also fertilizers in that sense. So I see a huge opportunity, and I see that development, it's going to start getting more, I think, more clear from the governments and from private and public sector, because rules are now getting a little bit easy to understand, and there is a demand. And when there is a demand, there is a market, and when there is a market, there are business opportunities which need to be sustainable. And I think Latin America is in a very good position for this. Yes.
Excellent. So, gentlemen, let me press you a little bit more on the timetable issue. Let's do a quick follow-up. When do you actually expect to see a large-scale project in this region sort of start construction? I don't need, of course, an exact date, but roughly when do you think we will start to see this industry truly taking off in that sense? Let's start with Santiago Bautista this time.
I mean, in my view, I mean, there are already projects, as you mentioned in the introduction, or somebody mentioned in the introduction, in the region, no? With different scales. It's still, it could be called test scale, but in fact they are industrial scale, because there are 2, 3, 4 megawatt projects in the region, no? In my opinion, in the next couple of years, we will see a lot of projects reaching financial closure and a notice to proceed in some point, of different scales, maybe 20 megawatts, 50 megawatts, depending upon the country and depending upon the resources. Still, again, the main question that I see is the off-takers. Some of the off-takers that we see are still local, which is logic, no? For the initial start of the market. And I think that once that struggle or that initial barrier it's overcome, we will see a lot of projects coming. So in the next 5 years, definitely 10 years, we will see a huge amount of investments in the region in green hydrogen, definitely, in my opinion.
Excellent. Thank you. So Santiago Acosta, do you have a take on this?
Yes. I think, I mean, electrolyzers they are an old technology. They exist from a long time ago. So that's not the problem. The problem is if you actually put an order now for a 20 megawatt electrolyzer from Colombia, I think the best option will be to receive it in 2027, something like that. Due to the global supply chain conditions, etc. So I have done that experiment myself, and I have visited, I mean, like 20, 30 factories of electrolyzer facilities. That's not the problem. The problem is the supply. So I think we will start to see projects by 2027, 2028, no problem, due to the global supply chain of electrolyzers, because it's not a thing you buy, you put an order today and you receive it in 1 year. It will take a little bit more because there is a long queue for electrolyzers and production facilities. I don't know if you have identified other suppliers that will be willing to send the electrolyzers faster, but that in my point of view is the main issue, because I mean that the opportunities are there, and they are starting to close financially, even at the price today of the US dollar per kilogram of hydrogen, which I see falling below the $1 per kilogram in before 2032.
Excellent, great insight. Thank you, Santiago. Tom, do you see this 2027, 2028 timetable as reasonable?
Yeah, I think so. I mean, I don't have so much visibility on what's happening on the ground in Latin America, because my perspective is a little bit more European, I would say. But if we look at the sort of lead times that we're seeing in Europe, I agree with you, Santiago, that the lead times for an electrolyzer, you're looking at probably, well, as a very minimum 12 months. That's just for the electrolyzer itself. Once you place the order, it could well extend to 2 years. I suspect it's even longer if you're looking at more distant markets where perhaps you're not so well established. So that's one consideration. But we think that, from the point where you actually press the button, start breaking ground, you're looking at 2 to 3 years probably for that rollout till commissioning. A lot of the delay seems to be coming actually ahead of that. So how, getting the financing in place, whether that's a mixture of public and private funding, usually is, getting the planning and permitting in place, those things are taking quite a long time, even in Europe, where we're trying to run very fast with this. So, at that point, you're looking probably at, a total elapsed time of maybe 4 or 5 years. So I think that's consistent with what the two Santiagos have said, which is it's the later part of this decade where we see the first projects coming on stream. But supply chain issues are definitely a consideration, and the positive side of that is there are emerging manufacturers coming through. Not necessarily with new technologies, but in low-cost regions like India. We already see a significant industry in China, obviously, but India is making significant moves into manufacture. So we could potentially see an opening up of the supply chain. And indeed, many of the European suppliers are also investing in production capacity. So I think whilst at the moment there probably is a bit of a squeeze on the supply chain, we do think that's going to improve a little bit. But then if really the targets globally are to be met, we need to see a significantly bigger expansion of capacity on top of what's already announced. So it remains to be seen whether that opens up. But I think the indicators are actually quite good. And I think we will see projects coming through. I would sincerely hope, by the later part of this decade, and certainly ahead of 2030.
Thank you, Tom. Let me take a moment to remind our audience that if they would like to ask any questions, you can write them on the control panel located at the top right corner of your screen. We will look at them and select a few of them to answer at the end. So let's move on to our next topic. Latin America, of course, is seen as an important region for green hydrogen. It has potential to produce clean energy way above its local power demand. However, it is also an important region for fossil fuel development. It has large reserves in many countries, a lot of potential for growth both in oil and in gas, depending on the country. So, for example, I was seeing a study from last month that showed that the share of fossil fuels in the global energy mix has dropped only slightly over the past 20 years, from 86% to 84%. So I wanted to ask you about this combination of what role can hydrogen play in the decarbonization of Latin America? Is it like a key link that could help the region and the world improve on these numbers over the next few decades? And for this one, let's start with Santiago Acosta.
Okay, well, what we see is from 2020 to 2050, we will see, of course, a reduction in the petrochemical energy mix. Hydroelectricity in Colombia is very, very high. It's roughly 80% of the energy mix, so it's very clean. But what I see is that we need to increase for the energy demand, which will be only in Colombia will be roughly between 2.3 terajoules of energy demand in 2050. That would be roughly 48% that energy mix will increase 48% renewables, and energy will be part of that mix indeed. We see a reduction, of course, in the final use of petrochemicals in transport, indeed. But I think the world needs petrochemicals for plastics. I cannot imagine medicine without petrochemicals. I cannot see how are we going to go back to glass syringes in the health industry. So we will need plastics for a long time, but sustainable plastic production will be also enhanced by new chemical with new chemical processes and new chemical and green chemical technologies, and hydrogen will play a huge part of it. And also the molecule CH4 is very important in that mix too. But I see a lot of hydro increasing, other renewables, and what I see is liquid energy in terms of petrol, oil, etc., decreasing a little bit. Carbon going out of the picture, I hope, and also natural gas is going to be very stable due to the chemical processes I mentioned, and that natural gas in Latin America is very important because natural gas is just cheap energy. And I don't think people in Latin America baking their daily bread in a poor countries baking their daily bread with solar energy, increasing the price 5 times for their breakfast. I don't see that coming in the short term. So I think natural gas will play a very important role in the energy mix in these countries. But I see, of course, hydrogen taking part and increasing at least 3 times in 2050, depending on the final end use. But I see it growing. That will be, and biomass, of course, and biogas will also take a huge part in the energy mix in these countries, which are mainly agricultural countries.
Thank you, Santiago. Let's move on to Tom. I think this is a particularly important issue in Europe.
Yes, I mean, I think I wasn't entirely sure how to take this question. I think there are so many different angles that you could think about this from. Let me talk about a couple of those. One of the things that we've seen quite strongly in some of the GCC countries, which currently subsidize significantly their fossil fuels domestically, are seeing an opportunity to switch to renewables, including renewable hydrogen locally, as a means, in fact, to release more of that fossil fuel production onto international markets where the prices might be better. That's certainly, thereby improving the fiscal position. We're seeing that in places like Oman, for example, where they're hoping to use that as a means to improve their fiscal position. I think the other thing that people are now thinking about is, to what extent can you start to draw industries into these regions which have low-cost renewable electricity? So we have in Europe, obviously, the CBAM, the carbon border adjustment mechanism, which is designed to prevent carbon leakage, but means that if you meet the criteria, the carbon reduction criteria in Europe, you can access the subsidies that exist in Europe. And so, I think that this potentially allows you to in developing countries to continue to produce products that require energy or require hydrogen directly as part of the feedstock, to continue to produce those products and to be competitive on a global scale. So I think understanding how you can produce these low-cost hydrogen molecules could be an important part of an industrial strategy that either prolongs or actually draws in new industries into those countries. I mean, to take an example, Brazil is a massive producer of iron ore. I mean, could you imagine them going into production of more finished product because you can use hydrogen DRI to produce steel, and then you have a product which is competitive on international markets, both from a cost perspective but also from a carbon perspective. So I think it's certainly true in Europe that hydrogen is seen as a key part of that transition. I think there's no reason to suppose that it couldn't be a key part of the transition in other geographies as well, albeit, of course, the constraints are quite different in developing countries as compared with the developed ones.
Excellent. Thank you, Tom. Santiago Bautista, what is your take on this decarbonization issue?
Well, in my opinion, of course, the decarbonization is shaping the new way we do a lot of things. Not only the energy, but also is going into different areas. Like Tom was describing in the industrial sector. And always when there are changes, there are industries or subsectors that have certain losses and others that have certain gains. And in my opinion, the countries in Latin America, they have a great opportunity to rethink how they do their manufacturing process and reshape that and reposition themselves in that perspective. When, of course, oil and gas industry is a threat for them because it's a new, I mean, it's a new way how do we use energy. But there are also other industries in Latin America that can have huge benefit out of the decarbonization. For example, mining. Now, mining, there will be a lot of new demand for copper and other elements, just to mention one, that it will be vastly needed for the transition. And Latin America has a lot of resources in those areas as well. So yes, there are threats for certain particular areas of the society, but if the policies are well written and we are a little bit more, instead of being resistant from the change, we are more proactive and try to lead the change, I'm sure that there will be more gain than losses in the society as a whole.
Excellent, thank you. So I think you'll be happy to know that we are getting a huge flood of questions from the audience. A lot of them relate to financing, which is something a few of you mentioned earlier. So let's go there now. A few of these relate to how are the projects currently being financed? What is needed to see project finance in Latin America for green hydrogen? Where do you expect the financing to emerge from? And then what financing institutions are the most active in the hydrogen space? Is there available funds supporting early stage projects in their development? So let's do a round about the financing issue. Let's start with Tom on this one. What's your take on this?
Okay, really, this is a really interesting area. As I mentioned before, I think we're pretty active in supporting project developers with their funding processes to access public funding. So I think the first thing to say is, public funding remains critical to this. It supports the capex either through tax breaks or grants or competitions, R&D support. There are many different ways that governments are supporting the capex element of projects, and those are important aspects to access. And I think we've seen the Inflation Reduction Act in the US using tax credits as their primary mechanism for supporting projects. It's really neat in the sense that it's very open-ended and it's an uncomplicated way of providing support. So you've got the CapEx part of it, you've got the OpEx part of it. So the business model is really important. So how do you bridge the gap between the cost of the fossil fuels, the cost of the hydrogen that is replacing those fossil fuels, and what are the business models that can help to do that? Again, those are clearly emerging. And there are good examples of that, within RED II in Europe, the hydrogen business model in the UK, for example. So that's on the public side, and it just needs you to kind of understand how those mechanisms work, and some of them you will automatically achieve if you achieve certain GHG thresholds and so forth. The question then is, how do you fund the rest of it? Because that's unlikely to be the end of the story, especially at the capex level. So now we're seeing quite a lot of the private funders coming in and looking seriously at this market. So we see private equity coming in. We work quite extensively with private equity providers to assess and do due diligence on projects. They are quite often associated with various layers of debt financing, whether that be mezzanine or senior debt, but that's starting to come through. And we see some of the banks starting to establish themselves, or trying to establish themselves as key providers of project financing for this type of project. So I mean, just last week I was meeting with SMBC, for example, that has funded many projects in the renewable space, and is now saying, okay, so what about hydrogen? What are we going to do there? And there are some specific funds that have been raised. TPG have this Capital Rise fund, for example, very big fund focused on sustainable energy, looking very actively at investments in the hydrogen space as well. So I think it's coming. There's nothing particularly mystical about funding a hydrogen project as compared with any other kind of project, I would say. The main issue today is the bankability and the lack of that extensive operating experience to be able to say, well, we're sure that in 10 years time or 20 years time, this thing's not going to be, a puff of smoke, and is going to be operating successfully. So I think getting the confidence, getting the bankability of those projects is critical. Obviously, the government support mechanisms help to increase the bankability. Other things like proven technology, proving of technology, will be critical to that as well. But I see it coming. It's definitely it's close to being there, and we will see before too long, I believe, a normally functioning project financing type market with key players in that space coming to the table.
Excellent. Thank you, Tom. Santiago Bautista, what is your take on this financing side of things?
Well, I think I talked a little bit before of the off-takers. No, I see it more in Latin America. The financing is different than in the US. No, in the sense that in the US, normally equity is harder than debt. In Latin America, debt is harder than equity. No, we tend to have more. The equity providers in Latin America are a little bit more daredevils, let's say, sort of speaking, than the equity providers in developed markets. No, so we tend to have people that are willing to put the equity, but normally the challenge is on the debt. And we have seen here in the region more project financing that rather than corporate finance in the projects, even though there are large corporations that are doing projects, definitely, but most of the projects are more, even some of the large corporations are designing the hydrogen projects as SPV. So they, when you look in detail, they don't have the corporate support from the financial point of view, but the corporations rather want to have a sustainable project by their own, no, like a own entity from profit and loss considerations. And the most challenges that we see in the region is first finding capital for research in the projects. The initial capital is very hard to find, and it's logic due to the nature of that capital, the risk associated to those. But once that capital is there, the most challenges that we are having for closing the projects are in the off-takers part. The off-takers, since there is no mature market, let's say, for the products that we are talking, it's very hard to predict what is going to be the price, and the off-takers are not that willing to have a long-term, let's say, contract without knowing the price and competing. I mean, if there's no certainty about the willingness to pay, let's say, from the market for an extra for the green products, no? So the off-takers, they say, okay, how much does it cost to me? How much does it cost to me the new product? And if is the market willing to pay an extra mile for the green nature of this product? So those questions are still on the field, let's say, and those uncertainties are obstacles or challenges that we need to overcome for financing the projects, in my opinion.
Excellent, Santiago. Thank you. Let's move on to the other Santiago Acosta.
Yes, elaborating from Tom's and Santiago's views, what I see is in terms of project finance, what I see now in Colombia is lots of interest from private equity and venture capital funds. What I have seen is people, off-takers and responsible technology managers joining forces together to develop use cases. This is not a problem of developing the technology, because hydrogen production electrolyzers, that's invented. That's not the problem. The problem is where to find a very good project to invest, and they are these VC and private equity funds and are looking at this as a system, and that's very, very important. So what I've seen is off-takers joining forces with responsible technology operators, because we all know hydrogen is a very complex element. It's in the upper left corner of the periodic table. That means it's difficult to manage. So you need responsible technology operators to do that. But what I have seen is the public sector, in terms of scientific ministries and things like this, and the innovation ecosystem is willing to invest funds and money to develop the necessary research in the use case. And what I mean is, okay, how do you produce fertilizers in a very efficient way? That still needs a little bit more research. So money is going to the application of how to use hydrogen there. And I have seen also a very, very growing interest in how banks attract young investors, and hydrogen is very, very good way to do that, in a way that if you unlock, for example, carbon capture and use in situ, in the same factory, you capture the CO2, and you use it there, and hydrogen is a way to use it there via syngas or other technologies. And if you try to unlock replicable businesses that are facilitated with hydrogen, the molecule, you will have you will attract a lot of interest, and it's already happening. If you go to our crowd, the website based in Israel that invests in startups, you will see the growing interest in crowd investment in hydrogen, carbon capture and use, syngas, and circular energy economies facilitated by hydrogen and gas you will see a lot of interest from young investors. And young investors, I mean people that are between 30 and 45 years old, which in 2030 they will be like the old investors. So they are starting to track this investment ecosystem. And with that in mind, what I have seen is, and I've been receiving calls from second floor banks and other multinational institutions asking, okay, show me bankable or hydrogen projects, because I want to attract investment from now to invest in 2 or 3 years on the road to co-develop these solutions. The world needs these solutions, and in countries like ours in Latin America, we have lots of say, informal and dirty industries to clean with hydrogen, so we can leapfrog the decarbonization of industry and reindustrialization of these countries. The same as happened in Africa. They go from having no phone lines to having mobile phones. They leapfrog the landlines. Something similar is going to happen with the hydrogen use, intelligent hydrogen used in industry. And it doesn't have to be huge installations, centralized installations of hydrogen. What we have seen is lots of interest in investment in distributed hydrogen solutions, and that's really important. And lots of patenting activities going towards that kind of applications, like in situ applications of distributed hydrogen in very, very specific industries in the chemical sector, and of course refining, and of course in iron and steel. You don't need to do that big at the beginning. You can start doing in modular way from the start. And these countries in Latin America are a very good place to pilot green hydrogen, green distributed hydrogen solutions, and unlock the myth about carbon capture and use and synthetic gas in an economical point of view. So it's a huge opportunity, and lots of private equity and venture capital is going to finance that as well. And governments will need to try not to stop that innovation, but to unlock it happening. So that's the other way.
Beautiful. That's a nice lead to the next question. Tom, you mentioned earlier the confusingly named Inflation Reduction Act in the US and the tax credit it provides, because it's largely a clean energy and climate change bill. So I was wondering, how do you see the policy side in Latin America? Do you think the support we're seeing from governments, not only on the financing side, but also on the regulation, investment climate side, is it appropriate? Do we need to do more? For example, should governments consider taxing carbon more because it will make alternatives more competitive? Should they get more into emissions markets, international markets? What ingredients would you say are missing or lacking or could be improved? And what are some of the positives?
Yeah,
let's start.
Yeah, really good question. I mean, I think let me say two things at the outset. I think one thing we have to avoid is having developing countries subsidizing developed countries. So I'm very anxious that we don't see a push for policies to be put in place in developing countries to support the export of hydrogen, which is effectively, the developing countries subsidizing the developed countries in their own efforts to decarbonize their activities. So I think we need to think very carefully about what measures should be taken locally and what measures should be taken on an international scale. And I'll come back to that in a second, but can I just make a comment about IRA? IRA is quite disruptive, and IRA provides support primarily for local manufacture of hydrogen or production of hydrogen. And in a sense, has not created the best of environments for potential exporters of hydrogen. By contrast, Europe is trying to do much more in terms of supporting and encouraging the export to and import into of hydrogen into Europe. So I think it's quite instructive as we think about the US policy, which actually is a little bit insular. It's very good for supporting hydrogen in general, and it will help to drive down the costs of hydrogen, because if you get it in greater volumes in the US, that will help to reduce electrolyzer costs and these sorts of things that will have positive knock-on effects in other countries. But it's not really very supportive of potential exporters of hydrogen to the US. In fact, if anything, it makes it more difficult for them. But coming back to the point on what policies should governments put in place, I mean, we're actually coming to the end of a piece of work looking at Oman and specifically what they should be thinking about in terms of their policy with respect to hydrogen. And what we've tried to do in thinking about that is strike this balance, which is to say, yes, you might have to put in place some policies locally that help to nudge the market in the right direction, but to the extent possible, I think it's good to try to rely on the subsidies that exist in the importing countries, so particularly in the EU, but that could also be true of Japan, for example, where there are supportive policies there already. Let's not try to put in place policies that directly support projects locally. However, there are definitely facilitating policies that are critical within those countries. So how do you make sure that producers of hydrogen in your country meet the criteria that are required by the importing countries? So there might be legislation that you want to put in place to enable that and to support that and ensure that it happens. Similarly, you might want to support some initiatives in terms of common infrastructure. So how do you ensure that you are able to get your hydrogen to the point of export as efficiently as possible? So you might want to, as I say, put in place policy or regulation that helps to achieve that. In some instances, it might make sense to actually have forms of subsidy to encourage that switch, and that particularly applies to where hydrogen might be used locally. And to the point I made earlier on, if in your mind you want to be able to maybe monetize more effectively your fossil fuels, because those fossil fuels are going to be produced whatever happens. But so I wouldn't support more exploration, more digging more fossil fuels out of the ground unnecessarily, but those things which are already slated to be dug out of the ground, I think at that point, if you can monetize that more effectively in your country by switching away from use of those on a subsidized basis locally, there you might need to provide some other incentives that help to generate demand locally for hydrogen. That could be in industry, it could be in transport, and so on. So I think there is an overall, I would say there needs to be a national strategy. I mean, I think that is actually quite important for hydrogen, because hydrogen touches lots of different, it's a vector and it touches lots of different sectors. Having that overarching strategy is actually quite important. So I think it's good to get that in place, and then below that, supply side policies, demand side policies, enabling policies. Just think about it really carefully, case by case. What do I really need to support? Or where can I rely on other support mechanisms that exist outside of the country? Because to the extent that you can use those, you don't fall into this trap of developing countries supporting developed ones or subsidizing developed ones. So I guess that would be my overall kind of thinking on the policy space.
Thank you, Tom. A very, very thorough response. Santiago Acosta, I see you taking notes very studiously. What's your take on the public policy side?
Oh, very nice. I love it.
What I see from the policy point of view, I think governments need to do two things. One is to how to incentivize and what things to forbid. and then markets will do the rest. What I see is, for example, many industries and many young consumers are demanding from the products they use how to trace back the claims that companies do about their products. Are they really green? Are they really clean? Are they really responsible with the use of water and the relationship with communities and local communities and the environment, etc.? This is very important. And when customers start demanding that from the products they buy, I mean, companies need also to put the private sector requirements for how supply chains work. And clean production and telling the truth is going to be very, very important in proving that. I think you remember the case of one of these major retail chains from the US that demands that all their suppliers meet certain ESG requirements and also the B enterprises classification in terms of responsibilities is really serious, and you need to demonstrate that. And the only way to do that is, okay, where do I source my major products, and where do I source and use my energy, and how do I demonstrate that that's real? For example, demonstrating that the hydrogen you are buying is really green, or the fertilizers are really green. That needs to have a very important way to demonstrate that, which is going to be demanded by not only by governments but also by customers. So the market is going to evolve towards that, and so that's one incentive. The other one is, okay, companies and countries will compete. So if Colombia, for example, wants to be the more transparent hydrogen production country in the world, okay, you need to incentivize that, and also put some sort of carrot and stick policies to demonstrate that, and then you will have a market. So I think the prices will follow, and governments are starting committing to emission targets last month in Egypt. But also, so Colombia is now it's very tough in what committed to. I think we have the commitments of a developed country, and I think we're not ready for that. But we are moving as a society to accept those commitments, and industry will follow. What I see is what Tom mentioned about the carbon tax. It needs to happen, because then organizations will start to really decarbonize, because otherwise they will be punished. And so let's see what that money is going to be used for, hopefully for more end use research for hydrogen. We don't need more electrolyzers. I think that's okay. The technology is advancing. Okay, I've seen now, and this is a very important thing, an Israeli company with more than 90% efficiency with ETAC technologies, a company called H2 Pro in Israel, is really changing the game. So major European and traditional electrolyzers will need to go up, and that will accelerate the price of less than $1 per kilogram. But then policies will also evolve with that technology, because when we see $1 per kilogram of hydrogen in 2030, or even before, I think, then the race will start to decarbonize difficult to decarbonize sectors like long-haul trucks, yellow machinery, and maritime, iron and steel, and some chemicals. So I see this happening, but consumers will do lots of work demanding this from companies, and from companies where they are going to invest. Remember, young investors, being this a BNamericas webinar and regarding also finance, this is very important to take a closer look to what younger investors are demanding and will demand from the companies in which they invest. And governments will need to compete. I mean, Colombia will compete with Chile and with Mexico and with Guatemala and many countries. So policy will attract investment, and that would be focused towards it. That would be my point.
Thank you. Excellent.
Lots
Santiago
of
Bautista,
things. Yes.
there's so many angles to this discussion. Santiago, what is your take?
I agree a lot with Tom that defining the policies has to be done in a way that the developing countries does not pay the bill for the developed countries. I think that idea is easy to express, hard to implement, in my opinion. And that's I think that the best policies are always those that are based on market, no? And I think that the policies needs to be driven not only for the production of energy of hydrogen, like the U.S. policy that we talk about during this hour, but also we need to create the demand for the green hydrogen, no? And so therefore the policies not only have to be concentrated on the production part, but also it has to be done also in the demand part. As long as we don't have a concrete and strong demand for green hydrogen, the projects won't be done and won't be built, regardless if you have a tax incentive or you have all the incentive in Latin America. If we don't have the right demand for these products and this new market, the products won't happen. So the policies, yes, I do agree that we have to have the proper let's say incentive locally for the production of these projects and the proper regulations, but also we need to be, let's say, we need to force or create the space for the demand of these products, no? And we need to have an honest conversation about what is the willingness to pay as a society for during this transition, no? And I think that has to be a joint conversation between developed countries and developing countries. Of course, the higher demand is in developed countries, definitely. I mean, there's no doubt about it. But as long as we don't change the way we use the energy and the way the feedstocks are produced, we won't change that much the emissions. So I think that's where the policy should be driven, in my opinion.
Excellent. So we sadly
Just-
are on that.
Just one point that I agree. Markets will do the homework. I think the rock age, the stone age, didn't end because lack of stones. It ends because there were more efficient ways to do things, and markets developed, and governments led those markets to develop. So we need governments that overcome the fear of new technologies and new solutions and let the market show the way. I think it will happen, and I agree with Santiago and Tom on that one.
Excellent, thank you. So as I said, we are sadly past our deadline, so I will thank everyone for this excellent discussion on what is clearly, I think we've shown, a very complex topic with many different aspects. I personally found it very insightful, and I hope our audience did as well. And with that, thank you again to our panelists, and back to you, Sebastian.
Thank you, Cristobal. Thank you, panelists. That's all the time we have for today. Thank you very much for being part of this great panel. It's been a great conversation. For those of you who are not yet subscribers, I invite you to visit BNamericas.com and check out the great content that we publish every day about Latin America's industries. Have a great day, everybody.
Thank you very much.
Thanks all.
Have a nice day.
Thank you.
Bye-bye.
Bye-bye. Okay.
Clients change, businesses change. The world is transforming faster than ever, and the opportunities are there, waiting for us. Over 20 years of digital innovation have turned us into the leading business intelligence provider in Latin America. BNamericas has a database with thousands of industrial projects, company profiles, key contacts, news, reports, and data, all in one easy-to-use platform. Every day, more than 50 on-the-ground journalists and experts analyze the region's major industries. Explore projects that feature opportunities for your business. Find the companies participating in those projects and connect with their decision makers. Make the best business decisions with all the facts and insights you need about the industries that are driving the Latin American economy. Get timely reports with the latest news about projects, regulations, and investments. Stay on top of the business trends. Find out what the risks and opportunities are for your business by reading the reports and analysis of our on-the-ground experts throughout Latin America. Redefine your business strategy and choose the path to success. BNamericas, connecting opportunities.